open stare. It was hot and she was walking in the scorching sun.
Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is August 6th, 2018. Let me give a shout out to my man Andy King for the song request. Devin the Dude, Almighty Dollar. Yo, I ain't never heard this guy. But as I listened to the song, I realized he was rapping about inflation and how his dollar ain't buying him nothing. Thank you for the song request, Andy. Hope you guys are doing well today. Look at that, man. Look at the bottom of your screen, 6,900. Ah, man, that looks horrible. That just hurts my soul. Ethereum at $403. Look at Monero, $115, man. This is crazy. Even worse, Litecoin, 73 bucks. OMG at $5.26. And my dear greatest EOS, $6.96. I'm glad I sold when I did, and I know I'm a little bit below where I bought back in at around $7 and some at $7.90 and $8, but ouch, this looks bad, people. Hope you guys are making your way through it, hodling. If you're hodling, man, I guess you're just hodling. Ain't got nothing to say to you on that one. But today we're going to be talking about one being there is now going to be a new, I guess you want to call it a token, but it's going to be an inverse token of Ethereum and many of the ERC20 tokens, sort of like Spider. If you guys know about equities, you got these Spider ETFs where you can go short. You can buy actually a ETF that's short, so it's inverse of the particular asset that you're tracking. This is neat, man. I thought this was neat. I thought this was something I wanted to bring to your attention, and this is going to be interesting. You'll now be able to short Ethereum by outright buying this particular asset, this token. Wow, I'm very impressed with that. The second article, and actually I think I'm going to talk about this first, but Goldman Sachs is finally looking to do a custodial account service for their customers. We'll look at that and how that may impact Bitcoin and the price of cryptos in general over the next year or so. But let's first take a look at that market cap. We're currently at $252 billion, man. We're back. We were almost at we actually went over 300 billion. All of that has been taken back. Bitcoin's dominance is at 47.4%, and a sea of red on the hour and 7-day, of course. Looking not good at all. So let's take a look at this chart really quickly. We're right at a pivotal, critical area. We bounced off of it earlier, but 68.80 really, I was looking at it on the 1-minute chart. If we breach there, we're heading lower pretty fast, and we're gonna touch that 6,600 area. And again, this is where I'm hoping we see a bounce. If not, oh boy, we are in trouble. We're in trouble. So I'll keep an eye on that for you guys. Let's look at that first article. It's out of CCN. Goldman Sachs may store Bitcoin for cryptocurrency funds, institutional investors. It says here, one of the most well-known investment banks is mulling over launching a custodial service to store Bitcoin for investment funds that want to hold cryptocurrencies. It says here, Goldman Sachs may custody cryptocurrencies, citing multiple anonymous sources familiar with the matter. Bloomberg reports that Goldman Sachs, the second largest investment bank, is holding discussions about becoming one of the first mainstream financial institutions to custody cryptocurrency assets. This service would be a major boon for cryptocurrency funds, but it could have also far greater implications since it would remove a major obstacle preventing institutional investors such as pensions and endowments from feeling comfortable adding crypto assets to their portfolios. Such custody services exist, but they have heretofore largely been offered by cryptocurrency startups such as Coinbase, not the Wall Street giants with whom institutions prefer to work. However, Goldman has yet to publicly confirm this, is that they're exploring a cryptocurrency custodial service. It says here, Wall Street warms to Bitcoin. The report comes just one business day after International Exchange, ICE, the owner and operator of the New York Stock Exchange, revealed that it is launching a new subsidiary called Bakkt to develop cryptocurrency products and services and help Bitcoin mature as a financial instrument. So I just want to stop there. I mean, that's pretty much the end of that article. But I picked these articles to read and highlight and share with you guys because, simply put, when you're investing, you want to invest when the markets are down and everyone feels like it's all over. That's when you get the good prices, not when it's at $20,000 and everyone thinks it's going higher. So you want to buy when everyone thinks it's going lower and it's over. That's when you buy, and this is when you guys should be getting in. And if you think about it, ironically enough, all of these news topics and news headlines about the big money getting in is really at the lows, and that's when they get in. They get in when it's the most optimal price to get in. So think of it from that perspective. If you have dry powder, I'm not giving you financial advice, but if you have dry powder, you look at purchasing things when they're at their lows, not when they're at their highs and everyone and they mama is trying to get into Bitcoin. So just keep that in mind. Let me know your thoughts about Goldman Sachs. I think Goldman Sachs sees a huge opportunity here, and they don't want to be, the last person getting to the space. They want to kind of have that first mover advantage. Even though Coinbase has it, I think Goldman Sachs really has that name amongst the Wall Street community, and they'll be able to take share of Bitcoin clients faster than Coinbase would ever be able to do. So this is just something to think about. Let me know your thoughts about it for sure. And we'll talk about that in the comments below. The second article, this is really a head turner for me. It caught my attention, and it says here, Ethereum turned on its head. Derivative token with inverse pegging to be launched by DYDX. So it says here, a new way has emerged for Ethereum traders to diversify their portfolio. A decentralized financial derivative startup known as DYDX plans to create short and leverage positions for Ethereum or Ether and other ERC20 tokens. Notably, the startup recently closed a funding round led by the market leader in investments, Andreessen Horowitz. That's big. Other prominent investors for the round were Polychain Capital, Kindred, Abstract, and other angel investors such as Brian Armstrong, the CEO and exchange platform Coinbase. Wow. So the founder of DYDX is Antonio Giuliano. As he stated here in this article, the main use for cryptocurrency so far has been trading and speculation, buying and holding. That's not how sophisticated financial institutions trade. He went on to speak about derivatives markets in general and how they are bigger than the underlying spot markets by an order of magnitude. He said here the cryptocurrency market is probably on the order of about 5 billion to 10 billion in volume. So you'd expect the derivatives markets would be 10x bigger. I think there's a really big opportunity here. So DYDX offers a short Ethereum token that is inversely pegged to the value of the cryptocurrency. When the price of Ethereum goes up, the token value goes down. When Ethereum depreciates in value, the token's value increases. This means that traders could sell these tokens after predicting a price drop of Ethereum. DYDX also plans to offer short and leverage tokens for any cryptocurrency on the ERC standard. This would potentially allow customers to short coins that they know are going to depreciate in value. The way these tokens work are the lenders on the back end of the system can gain interest by providing Ether or other cryptocurrencies as collateral. This collateral is locked into a smart contract which backs up the short tokens. These tokens will be offered on DYDX's own application and also on other exchanges who are partnering with the startup. Giuliano goes on to say, we think of it as more than just shorting your favorite shitcoins. We think of them as maturing financial products. Yeah, the startup was created with a vision to provide infrastructural support to institutional investors and big funds. The protocol itself was a project to begin offering margin tokens. Now it aims to offer the maximum liquidity to investors trying to enter the cryptocurrency market through margin trading. So what do you guys think? I know this may be a little more advanced for some of you, but and you know, you think, hey, derivatives, they're horrible, they're bad. They're actually not horrible and bad as you think they are. It actually provides extra liquidity to the markets and allows the spot assets to behave less chaotic and less volatile. And you know, if you want to play that game and make a lot of money and see a lot of volatility, you trade in the derivatives market that sits on top of that spot market. And really, many of you who are not liking derivatives markets, you actually do like them. You want the gains and the price action that you're currently, well, not as much right now, but you were seeing in the spot. You'll start to see that, and you see that in the derivatives. And really, you need to be playing over in the derivatives market, a lot of you speculators. So just think about that. Let me know your thoughts about that. The spot market needs to calm down as far as volatility. That way you can see more mass adoption of these cryptocurrencies that you all love. So let's see what happens. Let me know your thoughts about that. I'll definitely be using that. That's an awesome idea, and it's going to add a lot of liquidity and stability to the system on the spot side for sure. Again, let me know your thoughts, people. Make sure you guys like and subscribe, and don't forget to put some of that almighty dollar in your pocket. It's your boy Crypto Bud. I'm out. Holla.